into deeper understanding. We offer market insights as timely analysis of what's moving the markets right now, trading education to help you build real skills beyond surface level tips and tricks, and live trade ideas, real-time recommendations you can act on immediately. Opening Playbook is a free daily live webinar. Your hosts of the show are Nathan and Graham. Nathan has over a decade of experience trading Forex, stocks, and beyond. He's worked with dozens of leading global experts on strategy development. He's obsessed with math and systematic edges in trading. He's the creator of the Income Machine, Overnight Options, and more. He's a husband, a dad of 7, and the publisher here at the pub. Graham Lindman is also an options expert with over a decade of market experience. He studied technical analysis under 2 of the top minds in finance. He developed wrap order option trades for cost-effective entries, as well as created lightning trades, moonshot alerts, NVIDIA Elite, Apex Indicator, and Newton. He's also a husband, a dad of 2, and the copy chief here at the pub. Now, a lot of people in the stock market education industry will tell you that trading is easy if you just know their quote-unquote secrets. Well, that's not us. We'll tell you the hard truth, which is that trading is complex and takes time to learn. But we make the learning process much easier. The Opening Playbook exists because a lot of traders have trouble succeeding because they believe many of the myths out there about the market and trading. We'll dispel those myths and equip you to become a better, more mature trader, giving you the opportunity to be more successful, whether that means using our systems, tools, and strategies, or just trading on your own. Remember, our goal is to be a bridge for both new and advanced traders to go beyond outdated market narratives into deeper understanding. Now, it's important to remember that you should never trade with money that you can't afford to lose. Of course, nobody likes losing, but there's a difference between losing some of your investment portfolio and losing the rent or grocery money. So please don't trade with money that you can't afford to lose. And let's be ultra clear, any type of trading involves losing some of your trades. It's inevitable. Controlling your risk will keep you in the game, and we can help you learn structures and strategies to do just that. Our promise is that we'll be honest and transparent with you about what works and what doesn't, what you should make your own decisions about, and what rules we believe you should always follow. And here are some rules of the road to get you started. Stay calm. Try to trade without emotion involved in your decisions. Go at your own pace. Don't try to keep up with us or other traders. And ask questions freely. We really do want to help in any way that we can. And to help you get started, we'd like to offer you some free information. Answer a few quick questions by clicking the link in the banner I'm posting above. And for answering that quick survey, we'll give you custom content to better help you by using your feedback to improve our classes and education, and give you a free options cheat sheet, a digital, easy-to-understand options guide that will look something like this. Now, I'd like to give you some tips on using our webinar platform before we get started with our regular program. The button next to number 1 here, we call the hamburger button. That will collapse the green column on the left, and you can leave it collapsed because we don't use it for anything. Number 2 is the pause button. You can pause and resume the presentation whenever you'd like. Number 3 is the mute button. You can mute and unmute the presentation's audio. If you find that you suddenly lose audio during the presentation, make sure you haven't accidentally clicked or tapped on the mute button. Number 4 is the main announcements section, where trades that we take in the current session will be posted, as well as helpful links that can always be found there. Now, this section will only be visible if you're on a large screen. If you're on a mobile device, you won't see announcements here, but we do have another area that you can see them that we'll get to shortly. Number 5 is the toggle for going between light and dark mode, whichever you prefer. Number 6, the monitor icon will enlarge the presentation area without hiding the communications or chat area. Now, this button is shown in 2 places, And I highly recommend using this because it'll give you the best view of the presentation without hiding the chat from you. Number 7 is the picture in a picture button. This will reduce the presentation to a floating window so you can do other work behind it, such as go to your broker platform on a mobile device. Number 8 is the full screen icon. This button will enlarge the presentation to take up the entire screen, covering everything including the chat area. Number 7 and number 8 may or may not appear for you depending upon what device and browser you are using. Number 9 is the low latency button. Toggle this off if you're having any audio or video issues such as buffering. Number 10, all the way on the right, is the communications area. This is where group chats, announcements, and private messages will appear depending upon the tab that you have selected above. At the bottom, number 11, is where you'll type your outgoing message. You can press enter or tap or click on the green arrow to send it. Number 12 is where you can start a private message to a host by tapping or hovering on one of their group chat messages and clicking the double speech bubble icon that appears. Now you can only private message hosts, not other attendees. At the top, number 13, that button will collapse the communications area, giving you a larger area for the presentation, but you won't see any of the communications that are going on. Number 14 is the group chat. This is where you'll read and write messages that the entire group can see, and this is the default tab that you'll see when you sign in. Number 15 is the announcements button. This is where you can see those same announcements that were in the larger area that we covered earlier, but this will be available whether you are on a mobile device or a larger screen. Number 16 is the private messages tab. This is where you can see any conversations that you have started with the hosts or they have started with you. And if you have a new message waiting for you, you'll see a red dot below this icon in the toolbar at the top. And last but not least, number 17 is the button that will pop out the communications area into its own window. This is useful if you have multiple screens and you want to go full screen on the presentation and view the chat in a separate screen. Now, we have a version of this guide that I just went through that you can view on your own. The URL to get to that guide is marketspg.com/wisepub, and there's now also a link to it in the announcements section. And that's it. So once again, welcome to Opening Playbook. Don't forget to complete that survey to get your free cheat sheet. And now we're going to play our theme song and get to the regular show at the top of the hour.
Flip the page, it's time to start the game. Bam and Nathan calling out the names. Opportunities knocking loud and clear. The Markets Playbook is finally here. Opening Playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Charts are lighting up the morning sky. They spot the trends with a hawk side. Options and plays in a live display. This is where the big plays are made. Oh. Charts are lighting up the morning sky. They spot the trends with a hawk side. Options and plays in a live display. Every move counts in the game they play. Opening Playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Step by step they break it down. No confusion, no spinning around. With every trade, they set the tone, making big calls on their trading phone. Opening playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Oh, this is where the big plays are made. Oh. Opening playbook, we're ready to roll. Daily moves that will fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Oh.
Well, hello everyone. Welcome to the opening playbook for Friday, May 1st. I hope everyone is having a good day so far. Just getting started, obviously. It is Friday, so happy Friday to everyone, and also happy May, first day of May. We are going to have our normal Thursday guests here, JD and Silas, since we had kind of a special guest yesterday. JD and Silas weren't able to come on, so we are going to have them here today, and I believe Graham is going to join us as well. Let me get a couple things going here, and we will start the show in just a minute. Let's see here. We are just getting the guys hooked up here. Give me just a second. Sorry for the moment or two of silence here. Just trying to get these guys in the room so we can get the show started. All right. Let's see. What is going on today? Thanks, Randino. Appreciate you. All right. You guys make it here every day. You'd think the pros could make it here every day, but they got a lot going on. They got a lot going on. All right. Well, looks like we have a bit of an up day going on today. We'll see what we're going to do with that. See if we're going to stay up at this high. We're at 724 on SPY right now. Should have everybody joining us here momentarily. Goodness gracious. All right. Well, for those of you who may not know about it, we have what we call an announcements section of our platform here. If you aren't aware, at the top of your chat column, there's a little bullhorn or megaphone icon next to the regular chat icon. And if you click that, you'll see we always have three links up there. We have a guide on how to use this platform. We have a link to our new member survey, which gets you a free options trading cheat sheet, which if you're not new, but you don't have it, you're welcome to fill it out and get it. And we also have our free resources, which has maybe 20 different links on it that I think you'll find very helpful. So definitely go up there and check that out. And then we also put any of our trades for the session in there. So if they scroll by in the chat, you can always find them behind that bullhorn at the top of the chat window. You can always find them in the announcements. We also keep things like, upcoming events and stuff like that, like um, uh, this Sunday's event link is up there right now with Nate and Silas. Give me just a second. Sorry, trying to get these guys situated here. I think we had closing playbook and opening playbook mixed up here. They should be joining us any second now. And then let's see if I can get Graham's. Hmm, sorry, guys. Give me just a minute here. Let me get these guys in here. Uh, John B3. So if you click on the bullhorn at the top of the chat window, you'll see it says webinar platform guide, and then it says new to opening playbook, claim your free gift here. If you fill out that little survey for the free gift is the cheat sheet. And if you fill out that little form, you'll get it right on the next page after you fill out that form.
David, I
Hey,
demand a reboot. I missed the opening playbook music, and that was the thing I was looking forward to the most today.
well, I
Good morning.
certainly apologize for that. I apologize you guys had the wrong link.
Don't stop,
We'll
stop, stop,
we'll
stop.
get there.
It's all good. But I do want that music, so maybe you can like hit it
Yeah.
in the background real quick.
Uh,
There we go.
I'll send it to you. You can listen to it all day if you want. Sorry about that, Silas. How you doing this morning?
Good. How's it going?
All right. All righty here. Well, I think we might have a little bit of an up day going on if I know how to read a chart.
Well,
You are correct,
both are up.
sir. It is the Artemis rocket ship.
Yeah. It's it
So
might
I
actually be
sense
it
I
might
sense
actually get to the moon the
skepticism.
way it's looking today. It might actually
I
get to the
sense
moon.
skepticism, David. Are you not a believer in what you're seeing with your own two eyes?
Well, it's when we obviously, like, we had some news. I think it's fairly news driven. Uh, that I think we'll see if it stays up there all day. I think it might. I think sometimes those things that go up come down. Sometimes they don't, but we'll see.
That sounds like a pure skeptic.
Yeah, something like that. Um, all right. Well, what do you guys think? What I think is fairly close to irrelevant. What do you guys think?
Well, I I wouldn't have an opinion if I didn't ask if you had one first. Silas, I have a lot of thoughts on this, but I thought for exped now, correct me, are you on a time deadline today?
Yeah. Now that we got through Linkgate, for the past 10 minutes, I'm gonna have to cut out probably here near the top of the hour
Okay,
or so.
okay. Well, I think that'll I just want to know for our agenda this morning, folks. The last time Silas and I were together, we talked about doing a live, kind of similar to the Fireside Trader March Madness Guru Trading Contest, hypothetical 1,000 or real in the case of some traders, actually deployed $1,000 for the week and went head to head. You all thought that that would be a good idea, so Silas and I are going to go head to head to kick things off here. And then going forward, we'll try to bring in a special guest at the end of what should be a Thursday opening playbook. We jostled the calendar around for scheduling purposes this week, but every Thursday you can count on Silas and I bringing at least for 10 minutes of the program a nice little trading competition, which then you can all feed off of and utilize however you see fit. We'll do that at closer to the top of the hour today. We're also going to, Silas in a moment is going to be sharing his slides. I'm going to be talking about, and this is a good segue to the presentation we have for you at the end of today's opening playbook. If you haven't, well, if you haven't discovered the amazing market scorecard and our opening bell arbitrage service around the market scorecard, well, I'll be talking a little bit about today's read on the market scorecard. And then at the end of, after we do our stock competition, we'll slide right into that opening bell arbitrage presentation at the top of the hour. So how does that sound? We've got about 45 minutes to cover it all. Do you think we can do it, Silas?
I feel pretty bullish about that.
Excellent. So I'll hand it over to you. I can't wait to see the kind of the temperature that you do so well taking with your charts, and off to it, I guess.
Yeah. All right. I appreciate that. I'm laughing. Somebody typed in that I look like a pulver clone. I don't know if that's a compliment. Nah, he's a handsome, strapping young gentleman. All right.
Oh, I
So,
thought they were talking about me.
maybe so.
No, they're not.
Uh, all right, guys. Let's get right to it. We've got a lot of movement here, a lot of things to process. Again, what I'm sharing with you are just institutional data points here that we can use. Again, this information kind of was shared and discussed earlier on in the week. It doesn't mean that the overall the data has changed by any means, because the data is there and the positioning is there. We are certainly a lot higher. The charts and the prices are a little bit different here, but basically what we're seeing is the bid from the systematic community is still there. We do expect that to start fading as they're approaching near max longs. The higher velocity that we've essentially been talking about is just getting to a point where getting a little bit exhausted. Now, I know you'd look at the tape today and say, well, that's certainly not true. But eventually, at some point, some of that powder will dry up. Now, we've got corporate buybacks set to return as companies or exit their earnings blackout window. That will add a fairly steady and reliable source of demand back into the market. Hedge funds still do have room to add. And net exposure has fallen from around the 93rd percentile in late February to about the 53rd percentile today. So there's meaningful dry powder to deploy if the sentiment continues to improve. As highlighted last week, vol control funds performed as anticipated, deploying mechanically into equities across really what we saw across Friday and Monday session. We're seeing that again today. But again, I think the thing to note is sustained upside will require broader participation from structural demand sources. So retail retirement contributions, discretionary reallocations, positive options, gamma dynamics, those will need to kind of step in as a primary drivers if we're going to continue to see a rally ensue. This is a chart again. I don't suspect that we'll see this much more. I know we've been kind of looking at this really for the entire month of April, but that first phase of the April rally followed the typical geopolitical shock playbook closely, kind of that full V-shaped recovery within 6 weeks. Now, after recouping the Iran war sell-off and then some, the second phase over the past couple of weeks has coincided with Q1 earnings season, with the S&P 500 up an additional 5%, vastly outpacing the 1% median gain seen at this stage historically. So it just shows you how strong this rally is. Now, I like this chart here. As technicals, positioning, and flows are really what set up moves in markets. They're the most direct and immediate reflection of market sentiment. So when news or catalysts arrive, they tend to follow or coincide with price action that was already in motion underneath the surface. So news kind of gets all the credit. The narrative becomes, markets move because of this headline or Trump said this, therefore we're going to go lower or higher. But the underlying data really goes unexamined. So news comes in to kind of justify the move and, act like it was a catalyst. But the reality is that any market move of this type of magnitude happens because the groundwork has already been set up for it behind the scenes. So if we look at vol control funds reallocating approximately $19 billion in U.S. equities last Friday alone, I'll be very interested to see what those numbers are as we get new data next week. But that was the largest single-day position change in the data set over the last month. And so this type of buying has nothing to do with the news cycle or the sentiment backdrop of that session. The funds are not reading the headlines, right? The mandate is mechanical. As volatility decays statistically, those models respond by increasing equity exposure. So the reallocation that goes on and all the buying that goes on is systematic, rules-based, and entirely really indifferent to the narrative. And so the sizable CTA and systematic macro buying in global equities that we estimated since the start of April has now largely completed. We estimate that the global community has purchased about $170 billion that was across April. And so this chart shows exactly what we've been kind of talking about, prior to that V-shaped recovery alongside where positioning stands today. So CTA positioning is net long again. Global trend signals are positive nearly across the board and have been so long enough that the bulk of the meaningful buying, at least what we see as far as the institutional data points, is kind of somewhat getting near behind us rather than ahead. And so from here, what was a headwind and a source of downside during the unwind became a significant tailwind through April's buying wave. And now it's shifting a little bit towards neutral. Okay, so this is not necessarily to be construed as bearish flow development by itself. It means that the market can really no longer lean on systematic re-risking as its primary driver. All right. So sustaining further upside is going to require other sources of positive flow. And that bar is now material or higher as the positioning impulse kind of rotates from strongly bullish to more of a neutral stance. Now, last week's new highs came on low volume. So the short squeeze that was triggered by ceasefire hopes between U.S., Iran, lower oil prices, macro fears once again being defeated. Now, although recent earnings expectations were met, but few participated in the move off the March bottom, and we can see that through this right here. So the breadth of the kind of tells the story since the March 30 low. Tech, i.e., information technology and communication services, has accounted for the lion's share of index gains, with consumer discretionary, industrials, financials filling in the rest. And I'm sure JD will have some good 2 sigma trades around those sectors. So since the onset of active conflict, tech alone has really been the primary driver of the entire index return. Every other sector in aggregate has been a net drag. A few more slides here. Beneath the surface, dispersion has been widening. So again, last Friday's all-time high, we have new all-time highs here a week later, was driven by just 35% of the index. And so that just represents more of a narrow and kind of fragile advance. And the charts are getting very, very steep here. So institutional investors who sat out the rebound during last month, they may feel pressure to chase. We are here at the start of a new month. We'll see, naturally see equity inflow, but I think whether that chase broadens the participation or just extends the concentration is probably what would need to be scrutinized as far as putting risk capital at play. Default state of equities is up. I think this is a very interesting slide here. Is that this is every SPX episode, S&P 500 SPX episode since 2009. Where the index reclaimed a prior peak following a 10% plus drawdown. So the directional signal at 1 week has been pretty clean across all of them. Beyond that path, it gets a little messier, but it's really never crashed, from that breakout point. So when the market earns back a prior peak after a real drawdown, it's earned a bit more room to run. And we are obviously seeing that here, over the last week or two. It's not a guarantee. It's just, again, sharing data and what's happened in the past. So with all that being said, this is your general outlook for the month of May. Seasonally, the month of May has been known as the time of year to, reduce risk in portfolios, kind of given the lack of favorable fundamental tendencies that take place, here at this time period. So flatter returns, you can see that it's not negative. There's a lot of sell and may go away rhetoric out there. It actually averages about 0.9% over 50 years of data. It's half a century. And averaging return, again, a 0.9% with a gain frequency of 68%. So I don't know about the sell and may go away. Now, there's going to be pockets, I think, that you can look at a little bit closely and scrutinize for risk or de-risk positioning. You'll see that over 5 decades here, we see we show strength. We show strength at the start and the end of the month, slight weakness in between. The Memorial Day holiday, which occurs on the last Monday in May, that tends to provide a bit of a positive bias as the month comes to a close. And so the best approach to take advantage of the average tendency of the S&P 500 is kind of hold broad equities through the first few days, benefiting from the start of month inflows that we just talked about. Maybe look to pare back some of the risk to sidestep some of the mid-month profit taking that we will, I think, inevitably see. And that mid-month dip can provide an opportunity to accumulate risk assets to play the positive holiday influence back towards the end of the month. So that's basically what I got there for you guys and gals. And that's what I'm looking at,
Silas, that's really good stuff. And this last chart actually covered the question I had from the chart previously regarding May. Specifically, I wanted to see this, how does it play out on a day-to-day basis during the month? Because there are, I think, some really compelling things that you said during your presentation that caught my attention, I guess. First and foremost, I think what we're going to see in the beginning of May here, and we're seeing it today, is FOMO. The reason I asked David when I first chimed in about his own personal views on the market, there is a certain amount of skepticism, and that skepticism exists in the institutional world as well. And there's nothing more power, if there ever was a group of a larger group of tree huggers than institutional managers, I don't know what that would be, because they all love to hug the indexes, and if they got the end of the month report for their hedge fund and they aren't hugging that index, you bet your bottom dollar they're going to be super aggressive at the start of the month, and that's what's happening right now.
Yeah, I agree. I agree. I think we're seeing that tailwind end of month, start of new month, inflow, and I think there's a lot of people probably trying to short this thing and getting a little bit of a face pill right now.
Well, Silas, let me pull up my chart
Yeah.
or screen real quick. That's a good transition to really what I want to discuss. The way I come at the market, I think, is maybe a little bit differently than a lot of folks, but I loved your presentation. So that was good stuff.
Thank you.
What I'm going to share is our proprietary market scorecard that I produce 30 minutes prior to the market opening. And what the market scorecard does is it takes 8 key metrics and does the computer thing and mixes them all together and produces, believe it or not, a prediction, a forecast for the coming trading day. And this thing, it may seem a little foolhardy, well, who can, nobody has a crystal ball, who can predict the market, blah, 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 blah. But in my view, and over 30 plus years of doing this, compiling kind of all of my observations and identifying the things that I believe the market pays attention to, the efficacy of this thing is nuts. I mean, yesterday was a great example, Silas. At the start of trading, I think we were looking at stocks yesterday. Futures, S&P futures were up about 50 basis points. Now, when I ran the market scorecard, I was a bit taken aback myself because, I'm human, just like David is, right? I mean, it's natural to be skeptical, and my machine was spitting out a forecast for the S&P 500 to close above 7,200. Now, I guarantee you, nobody had that on their bingo card yesterday. Absolutely nobody. If anything, the prediction was there's no way these gains are going to hold, and we're going to close red for the day. Well, the market opens, the 50 basis points in the futures market dissipated immediately. And in fact, during the first hour of trading, we actually went to the flat line and below. So we were negative. And if at that time you looked at the market scorecard and you're like, there is no way we are closing at 7,200. Where did we close? Actually, the forecast for the S&P yesterday was 7,206, to be precise. We closed at 7,209. And I'm sharing this story because this has happened time and time and time and time again with our proprietary market scorecard. And at the end of the playbook today, we're going to be showing folks more details about how to use this amazing proprietary prediction machine. If there's going to be a tool in your tool belt, this is the one to put in it, in my humble opinion. I think all of the charts that you shared, there's a plethora of information we all should be looking at and compiling. Nobody has, like I said, the crystal ball. We have a machine that's pretty good at making predictions. The efficacy is just out of this world. And so if you want to add this to your tool belt, you'd be doing yourself, think of it as education, think of it as just making yourself a better trader, having this information. And there's nobody on Wall Street that has this. Nobody on Wall Street or off Wall Street, other than right here at Prosperity Pub. So I just wanted to spend a brief moment talking about it because I don't get this excited very often, but when this thing nailed it yesterday, I literally broke out the champagne. I mean, it was something to behold. It really was fascinating to watch. And I was even skeptical, like I said. I think 90 minutes before the trading day, we were approaching 7,200, and I posited that there's no way we're closing above 7,200. I didn't even believe it, right? Even though I've got the data and I know how often the data is correct. I thought that's just going to be too much for this market to break through that 7,200 barrier. And yet, like I said, we closed at 7,209. What you're looking at today is the scorecard for today. And I just thought I'd share that really quickly. The forecast 30 minutes prior to the market opening was for stocks to move higher by 50 basis points. What's interesting about today, Silas, is of the 8 indicators, there's one at the very bottom right-hand corner called the wave score.
Mhm.
That is a combination of what I would say is everything other than the 7 other indicators that go into the index, right? So it's an amalgamation of lots of different things, including just your basic subjective things, right? So that's where I can put in, anecdotally, when David was talking about being skeptical, it's I can apply that in the input to the market scorecard with this really cool thing called the wave score. Derives from my days in Southern California, hanging out with the surfer community, thinking I was Keanu Reeves in Point Break. Now, I didn't go out and rob any banks, but boy, with this market scorecard, I'm going to be robbing Wall Street all day long. I can tell you that.
No, this is pretty powerful. So do you construct a trade every day using this data, or is it more like for the week or I mean,
Yeah, this is a daily. So what we're doing is an intraday opening bell trade off of this data. The way I utilize the scorecard is I take my forecast, and then as soon as the market opens, if there is an arbitrage, which is defined as 25 basis points or more of deviation between actual market trade and where the scorecard is projecting, then I can make it a very simple level 2 debit spread trade. Most of the time here of late, we're just using the SPY to trade off of, and typically putting in a dollar spread and paying on average about 44 cents per contract. So we have a nice double your money opportunity. Of course, if the scorecard is wrong, which, to be fair, there are moments when things happen in the market that the scorecard cannot anticipate, and that will sideswipe us for sure. But for the most part, whether it be as a target destination or something that I can use during the day. And so I am actually, in addition to placing a trade right at the opening bell with this powerful tool, I've been playing around actually in the prediction markets, believe it or not. There are some really cool things. In fact, I opened an account because, again, the power of this scorecard is so great. I wanted to find as many ways to deploy the scorecard as I possibly could. So I opened up an account on Kalshi in early March, and in just 2 months, that thing's up close to 80%, Silas,
Wow.
using this market scorecard.
So can you give an example of how you would use it in the prediction market?
Yeah, I would love to. And right now we're just in the laboratory, and I'm tracking all of these trades because we're going to roll this out at some point, maybe. I mean, as I know there are some, I think things that are different about the prediction markets, but basically, if you go to Kalshi and click on their financial button, there's a category called the S&P 500.
Okay.
And there are two ways that I can use the market scorecard on Kalshi. I can take the data and then I can look at the pricing on the prediction of where the S&P 500 is going to close that day at 4 p.m. Eastern time. And that trades right up to about 30 minutes prior to the market opens. Now, to be fair, I produce this, 90 to 120 minutes. Well, I'm sorry, 60 to 90 minutes prior to the market opening is when I do all of my work. So I have the data in hand. I can get over to Kalshi, like today, for example, and I got decent pricing. It wasn't the greatest, but looking at the forecast, up 50 basis points. I went over to Kalshi, looked at the S&P 500 at 4 o'clock Eastern time, and 72.25. Okay. Yes or no? Will the S&P 500 close above 72.25? Well, up 50 basis points. I don't have this off the top of my mind, but it's higher than 72.25, right? So I could confidently go into the prediction market and say, hell yeah. The S&P, the market scorecard tells me that at the end of the day, or at least at some point during the day, we're going to be up 50 basis points. So at that time, 30 minutes prior to the market opening, it was about 40 minutes prior to the market opening. The pricing I got was about a 50% return, right? So I've got a trade live right now with my forecast in hand. And I mean, with the market up, whatever it was, 75, 80 basis points here earlier before we got onto the show, that trade looks like I'm going to collect. That's how I think a lot of money can be made in these prediction markets, and I'm excited to show people how to do that. To be fair, we're not doing that right now live. This is something in development, and I'm about to ramp things up because, like I said, 80% return in 2 months on the darn thing. I'm going to ramp things up over there in a hurry.
Yeah, those are interesting. I'm obviously familiar with Kalshi, and there's what Poly Market and the others out there. I used to do some binary trades like that on. I don't know if anybody heard of Nadex. I'm guessing they're still around.
I haven't heard
Uh,
of them.
they were kind of. I think they were like one of the first players or at least legit players, regulated out of Chicago, North American Derivatives Exchange. But it's basically where do you think, do you think the S&P is going to close higher or lower at and they did it on oil and gold and other currency markets. But yeah, I'm excited about
Well, the cool thing, right? A prediction market by its very name implies what? You need to have a prediction. And that's what's so cool about the market scorecard.
Yeah,
I'm not I'm not at all a prediction market guy. I knew nothing about it up until a few months ago.
yeah.
I knew of the evolution for sure, but the light bulb went on. I'm like, hey, wait a minute, I've got this powerful tool uh, making predictions on a daily basis, and that's what is implied with the prediction market. So if I've got that, if I come into the market with a prediction market with the efficacy that the market scorecard has, that's just asking for for me to generate profits trading
So
that way.
are you just using it on for market predictions only, or also like what is Taylor Swift going to wear to her wedding and things like that? So I think you can
Well,
bet on that kind of stuff.
if I had an accurate algorithm for what Taylor is going to see when she walks into her wardrobe, then I would add that to the mix. But right now, I do not have that.
Just markets. Okay. Just want to be clear.
Well, if I could jump in, I think the big difference between using Kalshi for something like the S&P and for some of those other things that it's being used for, nobody can come in and, nobody can get on a conference call, yell a word, and throw off the betting on the S&P 500. You know what I mean? Like they can
Yeah.
on whether Trump is going to say something or something's going to be said on an earnings call or something like that, where some of those things, they're what we would otherwise call insider trading, on some of those other things that you can bet on. When it comes to something like betting on the actual markets with Kalshi, nobody can throw that off like that, so it's much more of a legit kind of, you know, scenario, I think, than some of those other things that people are betting on, where somebody gets on a conference call and they just blurt out 8 words because people they know bet on those things being said on the conference call, or something like that. Um,
Yeah,
I also wanted
there
to
are
jump in real
absolutely.
quick.
Yeah, go ahead.
No, because obviously you guys are normally here on Thursdays. Normally, one of the things we do on Fridays is Graham has a weekly gold trade, and so I just posted that trade in the chat there for everybody who was looking for it this morning. It's also in the announcements. If you click on the little bullhorn at the top of the chat, and you can see it in case it scrolls by in the chat conversation. So. Um, that trade's in there if you want to take a look at it. Graham sent it to me just a few minutes ago.
Cool. Well, that's exciting stuff.
Yeah. Silas, let's transition. I was just looking at the chat and there were some questions. So somebody was asking, where does it say the scorecard says up 50 basis points? There's a little box called the final prediction. Here, I'll share my screen one more time so you can see that. Right here, okay. Final prediction and up 0.5% today. And I just looked, by the way, the S&P 500 is up 55 bips. I mean, this thing is nuts. I mean, it's just, and you can trade out. So the second part of the prediction market thing, right? I can place a full day trade, right? But then the cool thing about the prediction market for Kalshi, at least, is for the S&P 500, they offer a contract to trade at the top of every hour, right? So I can usually I'll look about 30 minutes before the top of the hour. And if there's arbitrage, right? Like today, I think would have been a great example of that, right? We were up some 85 basis points, right? So I'm agnostic. I don't care whether I'm long or short. I'm trading to target. We were up some 85 basis points, and I don't know when the market rolled over here a little bit, but I could have put in a no trade on exactly where the S&P 500 was at a given moment in time for where it's going to be at the top of the hour. And so I can trade to target within each hour going forward. So I'm doing both types of trading, right? And the cool thing is sometimes, I mean, there'll be times when the market scorecard does what it did yesterday, which is a glide path exactly to where the market is going to close, or it's something that you can just trade around the volatility around the target on the hour, every hour during the trading day. So that's becomes very powerful. So, if you're wrong on one side, you can still, generate a profit on the hour to hour stuff. And the sweet spot, obviously, like yesterday was, now I didn't do it. I should have made a SH, what, ton of money yesterday with that market scorecard. But I wasn't at my terminal. I'm down in Arizona helping my mother has dementia. So I just, she lost her wallet. So we're dealing with that, which is unfortunate, but, so that takes priorities. But when the market, dipped into the red yesterday, I mean, I could have placed, a 1,000% banger of a trade, on the reversal on the hour, every hour up until the reversal came, right? And it could have been just a massive day for me. It wasn't. I made a little bit of money, but wasn't. So those opportunities are present, intraday and then the 30 minutes prior to the market. All right, enough of prediction markets. Silas, the last time we were on, we talked about Lockheed Martin, and if you can, maybe pull up the chart on Lockheed Martin. I did finally get a green light signal on my 2 Sigma dashboard to trade Lockheed. I did not do it because I had already entered Huntington Ingalls the week prior. I'm just curious if you did any follow-up trading on Lockheed Martin.
So I've got alerts set that really haven't budged, I think, since we last had alerts at 525.
Okay.
So I guess I can pull up the chart here. Let's see, screen one. Sorry, got all kinds of charts. Actually, let me bring that down. Sorry, guys. Try again. Screen 3. There we go. You guys see it?
It's coming. There you go.
I can see it.
Yeah, so here is where I've got a couple batches of alerts. So what I'm doing, I guess when we talked, we were right around in here. Because that would have been last Thursday, right?
Yep.
And so you can see we haven't really done anything. Looks like we're trying to base out a little bit. We stopped at our key level there at 5.25. We've now traded below that a little bit, and if we start failing here, then that opens the door back down into this 480, 490 area. That would be the next likely reaction point. I think we also looked at the seasonality too. Noting that Lockheed has been hammered, deviated from its normal averages, and then looking kind of ahead, it's not the rosiest seasonal charts in terms of being bullish, But what we were trying to do is maybe capture some premium here while
that
based out a little bit.
Yeah. And that's what it's doing. It's basing.
And so we're just hanging out. That's what we expect when these levels plot, days and weeks and months in advance, and kind of call them reaction points. And so it doesn't mean that you come down here, you just, go load the boat. Now we just kind of watch for confirmation, do we want to get long here? And there's opportunities, depending on, what chart time frame that you're on and what you want to do. But we're getting the reaction that we expected. It's just not really moving, So you can see I've got alerts here that would notify me. We start getting back above the 525 area. That would show me that maybe there's some buying coming in, and go ahead and put on that position. And that's typically what I do. So I will set alerts on markets, like as you can see,
Yeah, that's
here,
cool.
here, and then that way I don't really look. I don't have to scroll all the time and look at stuff. I'll get an alert, say, oh, okay, we're down here, or we've broken it up above, and then I'll maybe reset alerts on that to get for my confirmation entry. And so I'll do
Okay.
that, multiple markets.
Okay. Let me show my Two Sigma dashboard on Lockheed. Um,
Don't bring up one of those Yahoo charts now.
um, I like I've said before, I'm never going to give up my Hotmail email either, or my AOL dial-up. All right. So this is my Two Sigma dashboard that just some technical explanations here. These bars at the bottom are not volume bars. They're Sigma bars, and tell me that Lockheed is trading below 2 standard deviations below the mean. And you can see yesterday, this green diamond is our uh, open signal. So when we get the green light, we go. And now I did not go, to be clear. There are a lot of stocks that flash green. And yesterday, well, I'll pull it up in a second. But so you can see we have based here the last 4 or 5 days. Haven't hit the levels that you're looking for to enter, but I feel pretty good about now. What this is telling us is that we can expect with a certain degree of certainty that Lockheed Martin is going to trade back to its mean. So this is simply a reversion to the mean kind of trade. Uh, doesn't offer the kind of the technicals that you use, Silas. But maybe it's a chocolate and peanut butter thing that people can put together. To maybe there's greater profit potential from doing that. But just without anything else, absent anything else, this would be a buy signal for Lockheed Martin at this level. The
So
stock,
yeah,
yeah,
go
go
ahead.
ahead.
Sorry.
No, I was just going to pull up another name, Royal Caribbean. And this is a trade that we did open yesterday. You can see, similar to Lockheed Martin, you had multiple days of the stock trading below 2 standard deviations below the mean. And then on its earnings report, I mean, look at that. That we jumped up to 281 on the stock before it settled back down. But that stabilization gave us the green light to enter a trade. And from a fundamental standpoint, I really like Royal Caribbean. And so that's why there's two levels of utilizing Two Sigma for me. One is, I mean, just the basic numbers of standard deviation, but there are 6,000 publicly traded stocks. So I like to narrow down my universe utilizing the fundamentals. And Royal Caribbean, every week I do an analysis and come up with 5 to 10 names on my watch list. And Royal Caribbean last weekend made it onto my watch list and then hit the green light. And so we opened a trade yesterday.
So did you do next Friday expiration, May 8th?
Oh, good question. So on these Two Sigma trades, I'm really just going long the underlying stock. And then to turbocharge, we'll do a level 1 call option at the expiration of our average holding period, which is about a month.
Okay.
So I believe I used June What did we do? Let me look quick. I don't have it on my computer here. No, May 29th. So went a little bit shorter on Royal Caribbean than I normally would, but I liked the pricing I was getting, so I used the May 29th call option. The 265 strike, I believe. Let me just verify that. Yep, May 29, 265 Royal Caribbean call option. So it was a simple buy the equity, buy the long the call.
Cool. Yeah, I was looking at the put side on those May 29s. They're pretty spreads are pretty wide.
Yeah, there was I mean it's not the greatest volume. But
Monthlies are a little
again,
bit better.
when the mean is up here around 280 or so, then I'm gonna make that trade all day long, even with a wide spread.
Yeah. Yeah, I like it.
Okay, we're getting close to the top of the hour, and maybe we should kick off our Fireside Trader weekly stock picking competition. Silas and I are going to go toe to toe. We can still be friends, Silas. So at the end of this.
All right, well, this is recorded, so in case we have to go back and check, I'm gonna remind you.
Good one.
Um, well, I'll tell you, this may sound crazy, but I think I'm gonna take do a fade play on S&P.
Okay.
And now I did enter. We're about 25 points off the highs, but so we may have to go down a little bit lower on strike. But I'm going to let's see. So I'm looking. I've got a weekend play on, and then I've got one going out to next Friday.
Okay.
So
So two trades, is that what you're
um,
thinking?
let me just double check here. I'm just kind of looking at some strikes here. We're 72.50. So I'm looking at, let's see, the May 4s. That's going to be Monday's expiration. So at the time, I think I had priced maybe the 73.15, 73.20s were going for a buck. Those are now about 55, 60 cents. I don't know that I really care that much. I'm looking maybe for at least $1 or so. If you've got something that you want to put on right now,
Yeah, let me I'll
looking.
share my screen again, and I have one very simple trade. I'm going to do a call debit spread. Uh, just to be clear, I'm flying a little blind. The market scorecard, uh, you know, is so good on an intraday, day-to-day basis, right? I haven't developed a tool for longer periods of time, and to be honest, anytime you're in the forecasting business, the longer you go out in time, the less effective your forecast is going to be. So I always have that in the back of my mind. So I don't do a weekly forecast, at least not yet. But so I'm not gonna play around with kind of market scorecard type strategies for our stock picking competition, Silas. I'm just gonna do um, a very simple call um, debit spread on Palantir, PLTR, and I am this is actually a name that is recommended in our Two Sigma trading service. The company reports earnings Monday after the market close. And let me share my screen here. You can see Palantir. Um, I'm looking for this stock to trade above 150. Now, when we started this, I was able to structure uh, let's see, 142, 145 strike debit spread on the May 8th expiration. But it looks like I'm going to have to do a 144 to 147, but that's still below my target, which is 150 on the stock. So next week we'll look for Palantir. We can buy this debit spread right now for $1.33 is what I'm showing. So let's lock that in. The 144, 147. If all goes according to plan, I'll collect $3 on this spread. I'm actually going to do more than double my money here. If David could put that into the chat for folks.
I am. I'm just
Then we have a
double
record of it.
tasking. I'm multitasking here, but I'll get it in a sec.
Okay, thank you.
All right, so we're getting that in there. That's the
Palantir.
144, yeah, the 144, 147 vertical call spread for $1.34 ROI, and that looks like
Well,
about
hey, let's be fair. I'm seeing $1.30 now.
I saw it at $1.34 you went in for.
All right, that's fine.
Uh,
I don't.
and
That's just fine.
and lower's better though, folks. I'm going to make a note. Lower is better. And ROI on that looks like about 120 something percent there. So yeah, May 8th was the expiration on that. May 8th. I just posted it there for y'all. We want it to close above 147 or expire above 147, or at least get above there by Monday after. You said they had earnings on Monday morning. Is that what you said?
Yep, earnings are on Monday morning.
So even if you don't get full, I mean,
I'm sorry, not Monday morning, Monday after the close.
Monday after close. So Tuesday is the day you're probably looking to get out then. If you get a big enough dump. If you get a big enough dump.
Yeah. I mean, if I can lock in my, close to 120% profit or whatever it ends up being, then
Yeah.
I'll lock it in.
I would guess you're probably going to get more like 100% profit on Tuesday than compared to what it'll be on Friday, but that's pretty good. All right. What do you got there, Silas? You still going to the 7320 on SPY, or what are you doing there? Or
I'm
SPX?
gonna do SPX 5 wide for expires Monday, May 4.
All right. May 4th and 5 wide to the 7320.
No, we're gonna sell in the 72.95, buying the 7,300 for about $1 or better, dollar credit.
So you're using puts.
Calls.
So you're going bearish on it then.
Fair call spread.
Bear call. All right.
Yep. Selling 72.95, buying 7,300s. It's slight. Yeah, look, the day is young. We might be ripping back up there. Could have gotten a lot better prices earlier, but it's okay.
All right, give me 1 second here.
Do you want me to type that in?
Sorry about that multitasking here. All right, let's get this going here. SPX, May 4th, buying the 7,300 call, selling the 7,295 for 55 to 60 cent credit.
No, dollar.
Oh, dollar credit. Okay, sorry.
Yep.
Dollar credit. That was the previous one. All right. Credit a dollar. Risk on that's going to be 400 a contract.
Yep.
ROI is going to be 25% on risk. All right. All right, that is posted. And then I think we're going to move on to opening bell arbitrage.
Yeah. If folks want more details on the market scorecard, I put together a video series that explains all of the factors that go into producing the market scorecard. So if you become a member of the service, that's in the member area. Um, so just sit back, enjoy the presentation, and Silas, we'll see you next Thursday. Thanks much. Good luck on your trade, and thank you, everybody.
Thanks,
Have a
guys.
great weekend, everybody.
Have a good weekend.
Hey everyone, we're super happy that you're here with us today. We're super excited. I'm super excited, especially to bring this to you with JD. I've been looking at his stuff for over the last couple of weeks, this exact strategy, and let me tell you, he's been killing it. Especially the last couple of weeks have not been easy. There has been a large amount of volatility in the markets, and usually for most strategies, that volatility will destroy or disrupt that strategy. But the way that JD has it set up, actually his system thrives on volatility. And we'll explain that in a little bit. And you might be like, Kane, but there's not volatility in the markets all the time. S&P, it's supposed to be this nice, efficient thing where there's just not that much volatility. And that is true, but every single day, there is a specific period of time where there is an extreme amount of volatility. And